Hello, my friends, on this wonderful Monday, July 7th, 2025. And the long awaited, without further ado, took forever to finally talk about it. Our friend Tesla. We've gone over most of the trades that we've been talking about personally on this channel. We haven't gone over Tesla, Dollar General, or the two losers from this year, the Five Below and the AMD. So that might be interesting. That gives me plenty of content to put out this week, talking about our previous trades this year and how they panned out. But this is long overdue. This has been closed for a long time. But we're coming back in the past here. We're coming back in the past to about March. Now, even before that, if you remember, in January, during the time that we were getting into that Aussie dollar position and most of our funds were tied up in the Forex market, we were heavy on that Aussie dollar trade. We were already kind of eyeballing some potential thoughts on Tesla. And I hate to talk about it, but I don't. Let's just talk about it. Back in December, okay, you had that high of $488. And it was over here in January when we were just looking at it because somebody just had a comment, or they texted me. They said, "Hey, what do you think Tesla looks like right now?" And I just had mentioned offhand, I said, well, Tesla, right now, just to me, I'm not taking a buy on Tesla because it was so high on the daily and the weekly. It was just sky high. You were just up there with your all-time high. We were still at 400 or something. So you're so high. So I just, call me a liar, whatever you want. You're not going to, but you can go back and look at our previous videos from January talking about Tesla. I just said, okay, I'm going to put some alerts below on some areas where I would like to enter. And it was funny enough, it just, end of January, those alerts just started popping off like crazy. And price just drop. And we actually had a final alert down at $210. It never hit that final alert. The lowest it got on Webull was $217. So we had taken a buy down here at $233. And our $233 buy, people probably thought, and we made a video that day too, and people probably thought, $233, what a terrible buy, You're buying in March at $233, its price is going down. Why are you gonna buy down there? I simply bought at $233 because I already knew, at the very least, I wasn't buying $488. And by buying $233, I'm already getting Tesla at half off, half the price. But Tesla ain't even worth $9. Okay, maybe in all actuality and reality, true value, it's really only worth $9. But I can only go by what the price is telling me, because the price doesn't lie to me. The price was $488 in December, and in March all of a sudden it was $233. So we took a buy. And all our game plan was, we weren't looking to buy at $233 back in March. We weren't looking to get above that all-time high again. All my game plan was to maybe come up to here about 360, 367. Maybe, bang my head against this ceiling over here. So we watched it. It consolidated for a little while. Oh, it made another little wick down here at 214. Look at that. See how sneaky that was? That's sneaky right here. This move right here This is the BS move of all, okay? Let me tell you why that's a BS move. We didn't get taken out because this was a spot trade, but you see that 214 low right there? That happened back in April. That is a BS move because all price loves to do that. It gives you this significant low here of, I don't know why I can't speak English today, of 217. And then a month later, it takes out that significant low. Just barely just takes it out. All that did was just take out it just took everybody's money that had their stop at 216, 215, 214, and it took all their money. And as soon as it took that, 2 days later, whoop, you're back up to like 260. So that right there just kind of convinced you, yeah, that was it. We were just out to move. So we weren't patient on the Tesla trade. In hindsight, looking back, when this maneuver happened on, when was this? I'm trying to see when this candle was. April the 9th. When that happened, that big green candle kind of showed you, okay, now we really are pushing up. So that was the time to start placing your limit buys within that candle. But Tesla, it just creeped up. It just kept going up. It got all the way up to 367. We were actually done out. I can see by where we had drawn our little squiggly here. Our exit was at 320. I can't remember for the life of me why I put it at 320. I think I just put it there because I wasn't expecting price to go back up to the 400s. I was just thinking, okay, I remember now. I remember discussing how, psychologically speaking, getting back up to $300 is very likely, okay? Because you're not getting all the way back up to 488, but at the very least, it would probably want to get up to 300 again to entice people to come back into the market. Because at least you can say, hey, generalization, Tesla's worth $300 a share now. So we done got out at there, 320. Our position closed. But price just kept on ripping right up to 367. And then, boom, a sharp drop down to 276. So now, looking at it now, this consolidation area that we were in March and April, that we broke out of, it's over. We might not see price like that again for a long time. Because now, looking at Tesla right now on the daily, what are we in right now? Another consolidation area. Okay. That is, coincidentally enough, just above the previous one. So we've never actually really fallen into and played around in that previous consolidation area. All we did was visit it once. We visited our old friend one time. Back in, when was this? A month ago, June the 10th, 8, 9, 10. So June 8, 9, 10, we revisited it. We're kind of revisiting it today. But Tesla is looking a little bit bullish to me at the moment to go ahead and break out of, because all I can play is what I see. So what do I see? We're in this consolidation area. So if you were just to play this area that we're in, which is between 267 and 278, where are we today? We're at 293. So we're at the low end. We're not buying at the high. We're not buying high. We're buying low compared to this consolidation area. So by buying at the bottom of this range, we have more of an edge for price to go in our favor. Because if you're buying at the top of a consolidation area, come on, bruh. That's another thing going against you. You're buying at the top of a consolidation area. You want to buy at the bottom of a range, bottom of a consolidation area. You want to buy when people get stopped out. A great buy to me right now would be 272. That would be a great buy to me. Have price just, I don't know why it just did that. Have price just come down a little bit lower down here and take a buy right here. Matter of fact, let's go ahead and place an alert here at 274. Price falls below 274, we'll go ahead and enter. Why? Because all the long money that's down here just below that 272. So we'll take a buy there with an expectation of price to tap that 267. So 267 will be our take profit. What would be our ouch moment? It's very simple. I'm going to trade really light on this Tesla trade. My ouch moment is 222 down here. So you might think, oh, well, that's not a really big, that's not really good risk to reward ratio. You know, it's about 1.5 versus 1. But we're going to trade light on this, and it's a simple consolidation trade with the intention of that 214, 220 area being the low for this year. It wouldn't surprise me one bit for Tesla to just creep on even higher and take out that 488. You know, it really wouldn't. You know, you think that that's not healthy, but that's totally normal for price to go up like that, come down, take its time, wiggle its way back up, come back down. In order for me to win, everybody else has to lose. Maybe you should tell yourself that. I tell myself that every day in the market. So that's kind of how I view Tesla. Tesla trade this year, it went great. You know, that was an easy 45% that we made on that. Now you think, man, you made 45% on Tesla, you made 20% on the S&P, I made 25% on Chewy, it was like 23% on Chewy. Okay, Dollar General, we're looking to make 65% on Dollar General. You know, we made 58%, I think, on Dollar General, all said and done. But when you make these big swing trades and you think, man, that's amazing, you're making that, it's all relative to the amount of money you're putting in the trade, okay? So a couple $100 margin here, $100 margin here, $300 margin here, you make 40 here, 30 here, 50 here, 60 here. That's not really life-changing money. But getting those habits in place for when your capital is much larger, it's amazing how you can make money in the markets, okay? Because you got $100 and you took the S&P trade with me and you made 20%. Okay, your $100 is now $120. You made $20. That's not that big of a deal. But if you just think about it, what if you had bought $10,000 on the S&P at 5K, and when it went back up to 6K, you made that 20%. Your 10,000 is now 12,000. So you just made $2,000 on one position. Same thing, $100,000. You don't think that when S&P was dropping down to 5K, there wasn't people putting $100,000 down on that? Of course there was, a lot. So their $100,000 within a 2-month period just turned into $120,000. They just made $20,000 in 2 months just for clicking a button back in April. But it's because they have the money They have the experience. They've been through it. They know what to expect. They know what kind of drawdown they can handle. All those factors come into play. It's not that easy as just coming to the market and just making $10K a month, easy side money in the market. Okay? So, I love everybody, and we will talk to everybody in the next video. Peace.